recipes for technical trading success in Cook's Kitchen.
Who's afraid of the collapsing dollar or inflation? A lot of people are, and that's what we're talking about today in Cook's Kitchen. Okay, the reason I made this video is because you're starting to hear the wailing from all sorts of advertisers and book authors about the imploding dollar and inflation running away and destroying your wealth and your purchasing power. Listen, I've been doing this for 25 years. I was an institutional currency trader for the bulk of the 2000s at the introduction of the euro. And so I've heard this all before. You know, in the year 2000, it was the euro was going to replace the dollar. And then because the Chinese were going to sell dollars and sell their treasuries, and they were going to go into the euro, and it didn't happen. And a lot of stuff has happened since then. So let's look at what people get wrong with this. So I have three blinding biases of economists and others wringing their hands about the dollar and inflation. The first blinding bias is low complexity thinking. What is complexity thinking? Well, if you're familiar with the sciences of complexity and chaos, you may know that it involves looking at things with multidimensionality, and basically nonlinear, because economic systems have the most complex nonlinear dynamics on the planet. Now, if you've read Benoit Mandelbrot, his book, The Misbehavior of Markets, or Nassim Taleb's The Black Swan, then you know what I'm talking about. And since I read those two brilliant mathematical thinkers about markets, this is what I've been saying. Because markets are social beasts with orders of magnitude more variance and volatility than even complex systems like the weather, which are semi-predictable, markets are always susceptible to Mandelbrot's wild randomness. He coined that phrase. It's very useful. Look it up. And then also asymmetric convexity. So you talk about convexity, talking about things that have curves, right? And things that operate on curves or power laws also have the possibility of asymmetric gains or losses. Gamma is the concept we use in options, where we talk about the change in the change, the second derivative, the acceleration of the speed, so to speak. So those are concepts that most people forget about when they're talking about complex systems that are nonlinear, like an economy or a stock market. And that's why they easily fall for traps about if A and B happens, then C happens, whether it's with the dollar or inflation. And they stir everybody into a panic when they're using extremely old Newtonian paradigms for economics. All right. Blinding bias number two, low flexibility with economic models. So this is an extension of the big idea of low complexity thinking. For instance, the great financial crisis of 2008 was unprecedented and challenged economic and monetary history, period. Except, what did a lot of thinkers do? They wanted to apply old economic and monetary models to this new world that we were in after the great financial crisis, when the Fed had to step in and do extraordinary things with quantitative easing, artificially suppressing the yield curve, et cetera. So, I mean, most economists didn't understand why GDP remained so constrained during the 2010s and why disinflation ruled. So why should you believe that they understand the current environment now after the great pandemic and stimulus? I would say, get a second or third opinion. All right, the third blinding bias of most prognosticators about inflation and the dollar, number three, is that they have a low grasp of the technology supercycle. This was a phrase I coined in 2017 when I was trying to answer two burning questions. Why was productivity hidden? There was massive productivity from the cloud, mobile, automation, AI, and yet it wasn't showing up in government productivity numbers. And two, why was inflation missing? What was causing deflation or disinflation? And it was just technology innovation that a new technology could create new industries and eliminate, old time-consuming ways of doing things. Like, for instance, just let's talk about software, not even semiconductors, but software by itself eating the world. Why do we have, hundreds and hundreds of SaaS companies? And granted, we got into a SaaS bubble, and that those valuations are coming way down after that bubble popped. But the reason that a Fortune 1000 company can have 50 or 100 different SaaS subscriptions is, first of all, software is infinite in terms of its capabilities. It neither consumes time or space. And so it's like a song or a book, right? There's a custom program for anything you want to do. And that's why a large corporation will have 50 or 100 SaaS subscriptions, because it's like new ways of getting things done, and especially if they sync and they integrate and the platforms work together. So that's a great example of the technology supercycle. To say nothing again of semiconductors shrinking and shrinking, and what NVIDIA is doing, and what a lot of companies are doing, going to sub 10 nanometer with their architectures, and creating super hyperscale, high performance computing and AI, machine learning that will, soon be writing its own software. All right. So those are the three blinding biases. And, I'm applying my background as an FX trader here, looking at every time somebody talks about a crisis, what's their agenda? So what is the number one agenda of people who are, you see headlines on YouTube every time you try and watch a YouTube video now. If you do anything with economics or trading, there's always an ad that pops up in front of you about, the dollar bill is on fire and your wealth is disappearing. And what is the government and the Fed? What have they done to the dollar? And so what's their agenda? Their agenda is these 5 things: sell the crisis and the fear, sell the crisis and the fear, sell the crisis and the fear. You get the idea. I'm being repetitive to make the point. This is their agenda. When anybody who starts out talking about the collapsing dollar, the imploding dollar, the burning dollar, your wealth evaporating, what has the Fed done? What is the government doing? Often they're a gold company trying to get you to invest in gold as your hedge. And you may know where I stand on that gold is definitely the barbarous relic, and I'd rather buy Bitcoin. But you don't have to take my advice on that. Just know what the agenda is of somebody selling the fear and the crisis about the dollar and this bout of inflation that we're having, which I think will be relatively temporary. All right, so 5 quick takeaways. I want to show you a dollar chart. So in FX, when I was a currency trader, I said it's all relative, right? So yeah, we're having some price inflation. Gasoline, food always seems like it's going up. Labor is hard to find, so wages are rising. Hey, we were in a suppressed state for a long time. We were artificially suppressed with interest rates and inflation, and so the pendulum isn't just swinging back the other way; it's snapping, right? And that's where your asymmetric convexity comes in. So, we should have expected this to happen, but a lot of prognosticators and economists were saying it was going to happen, 10 years ago, 20 years ago, and it didn't. But we'll just talk about, since the great financial crisis and quantitative easing, yes, they all said it was going to happen in 2010 or 2011 or 2012, and it didn't. So now, yeah, inflation's finally showing up, and because it was suppressed for so long, what happens? It's got centrifugal force. All right, let's take a look at the dollar chart so you can see, what's really happening to the dollar. This is a long-term chart. This is 1984 when the dollar spiked over a number of years, and then the Plaza Accord, a meeting of central bankers, decided, hey, let's stop this wild dollar trend, and they did. And so we've never seen those heights again, and we never will. In 2000, after 9/11, in our recession, the dollar gained some strength here. The dollar index got up to 120. Remember, this dollar index is 58% the euro. The euro has a 58% weighting in this. All right, so let's look at after the financial crisis. So here's 2008. What's going on? Is the dollar collapsing? I mean, the dollar fell before the financial crisis because the euro got so strong. The euro got up, to 150, and oil, it was what, $150 too. So there the dollar was weak. But ever since, the dollar's just slowly been grinding higher. And when everybody thought, oh, it's going to collapse because look what we're doing with quantitative easing and the trade deficit with China. Well, listen, your purchasing power parity has only gotten stronger with the rest of the world, and the euro is a pretty important block of as a currency representative. So being stronger against the euro, that seems like no harm, no foul to me. Even if you're paying for it now with a little bit of inflation within the U.S. So it helps to step back and look at the big picture. And the dollar chart can help you do that on a longer term scale. Oh, look, all right, let's go back to the other 5 takeaways for today, or the other 4 of my 5 takeaways. So number 2, stocks are still the number one way to crush inflation. I said it in 2009, and it's still true. If you want to beat inflation over the long run, I'm not saying this year, right? But over the long run, stocks are the way to crush inflation. It's been proven, right? I said it in 2009. It's still true. And so what that means is now you're getting a fantastic opportunity. Stocks are, seem to be headed into a bear market here as the valuation bubbles get popped. But you're going to get a great opportunity to buy stocks, in the next year or two here, because I don't see a recession. So, as long as we don't have a recession, there's not another 25% down in stocks. But you want to be set up to buy for the long term here. And that's the way you're going to beat inflation over let's just say over 10-year periods. Stocks are the way to beat inflation. Case closed. All right. Number 3, the Fed, I'm a big fan of what the Fed did because faced with uncertainty, they erred on the side of let's fight deflation because we don't want to be like Japan. But they misunderstood deflation and disinflation a little bit, obviously, because they didn't understand how the technology supercycle was driving disinflation. So they probably kept the stimulus on too long, but then came the pandemic. Who knew, right? So that's number 4. The pandemic and the corona stimulus were also unprecedented. Crisis number 2 in less than 12 years. And so you have to ask, really, before you criticize the Fed or any policymaker, say, what should they have done to protect lower income workers, from crisis? So a lot of jobs were eliminated in a lot of low income jobs. And so giving people money, from the helicopter seemed like a pretty good idea. Even if that money ended up in the economy in wrong ways, even if young men were sitting at home on mom's couch and buying Bitcoin. All right. So on the extremes, there were, unnecessary consequences or unintended consequences. But if it helped low income families get by during a time of shutdowns and business closings and job losses, I think we would have done the same thing all over again. All right. Lastly, look for my video, Why the National Debt is Irrelevant. I cover some of these broader topics too about the U.S. government doing quantitative easing and borrowing to finance things like the corona stimulus. You can also look for my videos, my stance on gold. And if you want a copy of the technology supercycle, I'll try and put the link somewhere in the comments on YouTube. But you can also just email ultimate@zacks.com and tell them Cooker sent you and ask for a copy of the technology supercycle. All right. Consider this part 1 in this conversation. I just put these slides together this morning. If you find mistakes, errors, or things you want to argue about, by all means, leave your comments on YouTube and let's have the debate. And I can flesh it out more next time with sexier looking slides. All right, talk to you soon. Thanks for joining me in Cook's Kitchen. Be sure to look on the YouTube page for links to the article version and other videos I've done on the national debt and the technology supercycle. We'll talk to you next week.